given the scale of this, $3,000 gold is now the very, very bottom of most assessments. And we're seeing $3,000 gold now being assessed Bank of America and other banks. De-dollarization process is rapidly escalating, and none of this is yet factored into the paper gold price. And we would expect to see first central bank gold revaluations within this second quarter. So I see us entering a window of opportunity to join big race by global central banks to swap our rapidly depreciating, unbacked fiat promissory notes for physical gold and silver bullion. The race is on. And the only question left to ask ourselves is how much physical gold and silver do we own?
Gold, renowned as a safe haven asset, saw a notable price surge on Friday amid a blend of geopolitical tensions and economic uncertainties. Should the Middle East conflict intensify further, analysts project gold prices could surpass the $2,500 to $2,600 mark. AndrewMaguire, an independent London metals trader, and analyst suggests that a $3,000 gold price is now widely regarded as the lower end of price assessments. Institutions like Bank of America also anticipate such levels. Anticipations are mounting for central banks to revalue their gold holdings, potentially as soon as the second quarter. The World Bank's publication underscores gold's unique status as the only financial asset devoid of counterparty risk. Due to its scarcity relative to fiat currencies, gold's long-term price trajectory is often upward. Central banks holding gold reserves stand to benefit from revaluation without the need to sell any gold assets. Maguire notes that recent gold purchases have coincided with the activation of beta testing for a gold-backed commodity currency, potentially slated for formal introduction at the upcoming Brics summit in May. In recent years, central banks have markedly increased their gold acquisitions at a pace reminiscent of levels last observed in 1967, as the World Gold Council reported. Maguire suggests that implementing a gold-backed currency initiative demands significant investment in physical gold, with reports indicating China tapping into its substantial shadow banking reserves for clandestine gold acquisitions. Traditionally, central banks heavily reliant on U.S. dollar reserves favored liquid treasuries for interest earnings. However, given evolving perceptions of the security of these securities, central banks are compelled to diversify their holdings. Come along as we explore AndrewMaguire's valuable insights. Don't miss out on our latest updates. Subscribe to our channel and activate notifications. Thank you for tuning in.
Gold rally has only largely been driven by invisible over-the-counter related monetary gold transactions. What is confusing the analysts trying to understand the gold rally, why this gold rally, and why there's been an increase, while there's been an increase in the LBMA CME centric flows, they actually don't jive with the scale of this rapid gold price rise, and namely what is officially flowing into central bank coffers. The entire issue leads back to the mainstream media still not understanding the implications of gold being reclassified by the Bank of International Settlements as a first-tier asset class on the 1st of January 2023. This event is what opened up a large increase in unreported, bilaterally settled central bank and sovereign monetary gold demand. It isn't recorded on the COMEX at all. This means that central banks, sovereigns, and institutional bilaterally settled spot gold over-the-counter buying now has to be physically deliverable. And by their very nature, these bilateral transactions are unreported. And this opens up spot gold, over-the-counter gold purchases to feed central bank monetary gold purchases. And the lion's share of this monetary gold is being accrued by the Brics-related Sino-Russian Gold Alliance, which was established back in 2013, but it really waited for this first quarter of 2024, to pull the trigger. Now, it will be looked back on, historically, that these central bank purchases were being coordinated in concert with Russia and China activating the recent beta testing of Glasiev's green-lighted Brics gold-backed commodity currency in readiness to be formally tabled ahead of the Brics May 14th to 19 Kazan summit next month. Now, it's gone unnoticed that this is a multi-trillion-dollar project. It requires some very, very big money to be put into physical gold. And we have it on good authority that to do this surreptitiously, China has been deploying its very large 3.25 trillion of shadow banking reserves. And we'll look at the effect of this beta testing of Glasdev's green-lighted gold-backed commodity currency. But let's first look at how vast tonnages of gold purchases have largely sidelined the LBMA conduit, because it explains why the analysts don't get it. Now, while Russia had largely already divested itself of dollars in June 2021, openly announcing they were removing dollars from its national wealth fund, as of this March, China's State Administration of Foreign Exchange, the SAFE, reported holding officially 3.25 trillion of US dollar assets. And while at the margin it has served China well not to openly dump dollars, it is the over 3 trillion of unreported shadow banking reserves that are surreptitiously being exchanged for bullion in large tonnage size. Now, if you recall, in our early January 2024 episode, we drew attention to a little reported Bloomberg report that focused on the concerns made by former US and Treasury official Brad Setster. We talked about this before, that China's reported 3.24 trillion of foreign exchange reserves comprise just half of what he estimates is closer to $6 trillion, which he expressed as presenting a new risk to the global economy.
In a significant development, the upcoming Brics summit scheduled for October 2024 is poised to announce new memberships, marking a paradigm shift in the global order. Several developing countries are expected to receive invitations to join the Brics alliance, signaling a broader coalition of emerging economies. According to insights shared by AndrewMaguire, the focus of the upcoming Brics summit, set to take place from May 14th to 19th in Kazan, will center around Glas's currency baskets backed by commodities and gold. Following beta testing, these currency baskets are anticipated to undergo formal evaluation, potentially triggering a revaluation that could elicit responses from Western central banks. Maguire highlights that escalating geopolitical tensions, coupled with efforts by Russia and China to establish alternative trade routes and clearing systems, are hastening the process of de-dollarization. The Chinese yuan, in particular, has emerged as a strong contender against the US dollar, with recent developments suggesting its potential to surpass the dollar in leading central and offshore transactions in Russia. As per a Reuters report, the Chinese yuan has gained prominence as a leading foreign currency in Russia, indicating a notable shift in currency dynamics and signaling a new phase in currency development. Let's get back to the interview.
Most recently, this gold buying stepped up significantly on the 20th of March of this year. This all concurs as to why, despite aggressive official capping efforts, spot gold blew through 2150 at that very date. Now, while reported Chinese gold buying is being attributed to retail Chinese demand, there is no doubt that it is the concurrent drawdown of this unseen central bank demand that is also tightening available physical supply, which is why it forces the offer to sell physical gold to rise. Now, this counters reports that gold is synthetically being driven higher by large options derivative bets. Wouldn't that just suit everyone's narrative? But in summary, these cross-currents create uncertainty, which indicates we may be offered some opportunities to capitalize on the officially spun gold correction narrative. But this completely ignores the fact that the gold markets are now being physically settled outside the LBMA CME ring fence. This all leads to the Brics May 14th to 19th Kazan summit next month, which we drilled down to in our last episode. It focuses on the second of Glasdev's two currency baskets, which is backed by commodities and gold. And following 2 months of beta testing, Glasdev's green-lighted Brics currency baskets will be formally tabled and tested. And when formalized, it raises the revaluation trigger point, very likely forcing a knee-jerk reaction from Western central banks to up the ante before the end of the June second quarter, perhaps even. Now, given the Brics 10 plus members control, and more to come, control the lion's share of the multi-trillion-dollar oil and energy complex, the scale of this upcoming de-dollarization process just cannot be underestimated. Now, the Brics adoption will significantly raise the dollar price of energy and oil, of course, feeding an unwelcome inflationary input into the West. It won't alter the gold price, it'll alter the dollar price. In fact, one of my most respected liquidity providers, very closely associated with the Russian-Chinese markets, sees very recent geopolitical escalations and the increased weaponization of the SWIFT clearing system to seriously bring forward the implementation of Glasniev's gold-backed commodity currency. And given the scale of this, $3,000 gold is now the very, very bottom of most assessments. And we're seeing $3,000 gold now being assessed by Bank of America and other banks. Now, given current geopolitical escalations are accelerating, Russia and China's efforts to open up fresh sanction-proof trade routes and clearing systems, the de-dollarization process is rapidly escalating. And none of this is yet factored into the paper gold price. And we would expect to see the first central bank gold revaluations within this second quarter. So I see us entering a window of opportunity to join with a big race by global central banks to swap our rapidly depreciating, unbacked fiat promissory notes for physical gold and silver bullion. The race is on, and the only question left to ask ourselves is how much physical gold and silver do we own?
As we approach the upcoming Brics summit, where discussions will center around currency baskets backed by commodities and gold, what implications do you foresee for global currency dynamics and the ongoing process of de-dollarization? Share your perspective in the comments below. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.